Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for a pretty wild trading day. It is Tuesday, the 29th of August, 2023, 5:45 p.m. Central Time. So we come in, and it's an interesting event today. We're seeing weakening in consumer confidence. So the Conference Board came out, and we're seeing it in all categories that they came out with. But the market's been waiting to see what's going on with jobs, and we had a big weakening number. Last month, there was a total of 9.6 million jobs. We're down to 8.827 million being offered. In addition, the turnover rate, which was something we had to deal with during COVID, people going on a job and then going, I can get much more money over there, I'm leaving you. Well, that's changing. Now it's starting to drop as people are settling in and employers have gotten smart. They're not offering crazy numbers anymore. So you got to be careful with that. But here's what the market's looking for. They're looking for a win for the Fed. And a win would be bad news. Now, here's the funny part. Bad news is friendly to the stock market. Why? Because the market psychology is right now that, hey, if we get some bad news, the Fed's not going to have to keep raising interest rates. And this idea that they'll have to hold them there very long might change if things got real bad. And that means the pressure would come off some of these markets. I've given you the whole scenario, a doctorate on what's going on. And it is that simple. I can make it much more complicated. I can join forums and talk. I have facts and figures too. But that's where it's at. So when we got down to that number, the market went, we have Challenger Gray, and they're looking now instead of the 300, I take that back. ADP, instead of looking for the 300,000 gains, they're down to under 200,000. That's a big number. What if they got 100,000? That could shake things up. Challenger Gray, that's always a little bit different. I don't have an estimate on it. It's corporate layoffs. We'll see what's going on. They're probably not doing a real lot of them that I would think, but you don't know. Now, if they come in a bigger number, again, that's bearish for the jobs market, friendly many other markets. And then we get on Friday the big jobs report, and on Thursday we get the Fed's favorite indicator, the PCE indicators. And watch those, because the Fed loves that indicator to get its read on what inflation is doing. So did this booster the idea, give a boost to the idea that the Fed doesn't have to raise anything in September? It most certainly does. Can it be knocked down from that perch instantly by any of the other reports I just said? Absolutely. So it makes this week difficult. Why? Thin trade volume. I tell you, thin. Traders aren't studying the markets right now. They're studying the beautiful weather outside. They're making plans for their Labor Day holiday. And then everybody looks at it. We're all back to work September 5th. Let's get into the seat and go and do what we have to do. Before I get too far, I'm having my Labor Day sale. It's now. It ends right away. If you want 40% off on any yearly research new subscription, you got it. All right. I doubt that I'll go 40% again. I pretty well made up my mind on it. And I'm probably going to raise prices at the beginning of the year. I haven't done that in a long time. It's time for me to do so. Charting courses. As you know, I'm redoing the whole new charting course anyways, but my other charting courses are all there. They're phenomenal. And they're giving you a big discount. So give you an idea. Normally, let me get over to this and just show you where we're at on the pricing. Here you go. On the pricing, normally either my outside day course, my Bollinger Band course, they're $120. Nah. They're $72 right now. Now, I say first 30 days. The courses have a time limit on it. They're not meant for you to pass around. We watch many different things. We have safeguards, because that used to be a big problem that I had. And you can always come back and take the course again for 2 weeks. And believe me, you'll knock the course off in a weekend, but you get an extension at any point. But right now, 40% off. If you're interested, this is great. And remember, on the courses especially, you tell us when to activate them. You'll get a letter that, hey, you've bought the course. You click a link when you're ready. That activates for us everything. We start the course. We send you the charting software to go with everything. You take it from there, and away you go. So how does this all play out? Well, you can move your cursor right up here. What will happen is you'll see an icon, click it, or listen carefully, iraepstein.com, and either go to education for the courses or the word research on the top and give it a click. Now, on the research when you're there, it'll by default have the dailies. You won't see a discount on those. They're not being offered. Move over to the yearly and everything lights up for you and away you go. Can't be easier. And I'm shutting this off soon. So time for you to start making your actions. Okay, so we've got all these reports coming. What do? Well, let's take a look at the market and see what it says. I was truly hoping the market was going to get closer to the 18-week average of closes. And that's a closing basis. It missed it. Now, on a closing basis, if you go to the bar chart, you hit that number, the 18-week. You'll see in a moment here. So what the market did is it broke down, developed some sideways action, getting a pop, all right? That puts the market in the short-term trend back up. I don't think you'd argue when you put the swing line on, you get to see higher lows, higher highs, not lower. Higher highs, higher lows. Number two, the market fought for the past few days, the 18-day average, and today was the blowout day. If you were a bear, and you got over 44.8550, I think you had a run for the hills the moment that happened. What do you have to hang your hat on? You've now changed the game, so where could be the upside target? You have support well under the market at 200, 100-day, so the resistance that I have will be the upper Bollinger Band. And that number's right here at the 45, let's call it 53.5 zone. So if the market wants to move from here to get there, you got to go up another 40 some odd points roughly, or to be exact here, let's see, 34 points to get there. Could happen if any of these other reports come out friendly. Momentum-wise, you're overbought. So what I think is unless this is going to turn around and embed, and with the amount of days left this week, it cannot do it. It's overbought. It's like a rubber band you're pulling. It's bouncing away up here. I don't know if it'll get that high. And on pullbacks, the battle I expect to be at the 18-day average at 44.54 for a bit. In the NASDAQ, overbought. Trend up. If it rallies, I look for big resistance, 15,546. Now, what helped this market today is NVIDIA went to a new all-time high closing price. That's important. It's not way up where it was off the earnings in the aftermarket, but it's still up. And I have warned traders, the one market that I refuse to even think the short side of for the near term is NVIDIA. NVIDIA is the right way to say it, by the way, not NVIDIA the way I did it. NVIDIA. Dow. Out of the downtrend, I feel great. I warned traders and my clients, I said, I don't like the idea of going short into that first challenge of 100-day average, 200, the Bollinger Band. And if you lose the embedded reading, what are you going to do? Well, let's just show you this, because this is what you're going to learn if you take the Bollinger Band course. Here you get a market still embedded. You lose it this day. What are the odds? The odds are from this settlement, you're going to go wherever that 18-day average is before you come back down here. Now, there's a way to play this and so on and so forth, but here's what the market did. I got what I wanted. I have no trend now. I have a market that's neutralized itself, looking for things to do, and I have the exact same play in the Russell. Identical, fought that. I feel great. Now it's time you sit back and you let the volume come back into the market a little too. Remember, thin trade, all these reports, it's a recipe for disaster. In the T-bonds, game ended, I guess, at the lower band, and now this is the first time we're closing over the 18-day average. In addition, higher lows, higher highs, not overbought. There's room left to run. If you take out the lows of yesterday, remember, by the way, what was yesterday? For those of you that follow Outside Days, one of my courses, here it is. So as long as you don't take out yesterday's low, you've ended the downtrend. If you rally, potentially you could be going up to the upper Bollinger Band, so it's always something I watch. I'm not saying it has to, but that's important. Now, a failure in this market would be tomorrow, or, remember what I just said, tomorrow, because this is today's action, this outside day. I said yesterday, but you understand what I'm saying. We're already into Wednesday's trade. So if you take out Tuesday's low, either Wednesday or Thursday, this is a false move. After that, I don't care. As long as that doesn't happen, the odds favor the market's going to try to work itself higher. You don't have that pattern, as you can see in the 5-year notes, and I feel great. I told traders last night I didn't want to do anything in the SEP 5. I was moving to the D's, and I forgot to take off my note on my SEPs, and I said, look for the December recommendation. There was none. And I already knew what I was doing. The way it works, I have it on a scroll wheel, and I didn't scroll low enough. It sounds funny, but it all had to do with how I was working the mouse when I was writing it. In the SEP dollar index, you lost the embedded reading. Any close under 79. The only day you can get it back is the day after you lose it. You closed right on the low. It's going to be a son of a gun to do that. It would be one thing if you came down, you lost it, and you were higher in that range. Then I'd have more faith in it. So what do I think? Well, if it doesn't get it back tomorrow, as long as you don't take out this high, which again, an outside day down, I think you're going right back to the 18-day average of closes in very short order. And you bottomed out in the eurocurrency, according to my theory there, and you're already up into all the areas. It's hitting its upside targets. So what about the pound? Oversold, bouncing around, bias down, short-term trend up with higher lows, higher highs. Not very exciting. Bitcoin. So Bitcoin gets a big win. Now let's talk about what that means, because this market put on a good gain today. The market gained, 7.36%. That's a big gain, $1,900. Grayscale won a battle with the SEC again. And this battle was a major battle. I don't consider this minor. The logic of the battle is Grayscale is basically wanting to create an ETF that is based in part either on a cash market or on the futures. Well, the futures exist. How did the SEC let that happen? How they let it happen is they appreciated what the Chicago Mercantile, the NFA, and CFTC were doing to regulate the players in it, what it is. Well, if you create an ETF and it's based, for example, on a futures contract, you're not controlling what it's based on. Where's the manipulation? The manipulation that can take place is in the daily pricing of it, but at the end of the day or the end of the theory, the two should come in together. Why? Because what's the delivery? What's it based on? How do you work it? If it's a cash delivery, it's got to be based on Bitcoin future prices. I use the word futures prices, which is a conglomerate of prices all over the country and how they work. So what basically happened is the court said, we don't see that you've successfully made any reason here for a distinction saying just because it's an ETF, it's not legal. The futures are legal. Where's the big difference? So will there be challenges to this thinking? Yes, I've given you the gist of it. I think Grayscale wins today. At the end of the thing, I think Grayscale wins. So is this a big move for them? It is. It's an important thing for those that want to trade it. You'll probably have an ETF you can work with. I love it because it's another product that we can talk about. In November, Brent, WTI, the difference is shrinking in. Okay, but it's still over the 417 level, the 18-day average. So Brent has still got a more of a bullish bias. Now, for the first time in a bit, you're trying real hard to get over this 18-day average. Now, this is important. If it does, then the 8,500 level opens itself up. Hopefully, if the dollar drops, is that friendly crude. Crude is priced in dollars most of the world. So it's definitely, if the dollar drops with the dollar, you're getting more of a purchase if you think about it, okay? They'll raise the price of the oil, the lower the dollar. It's just the way it works. WTI, same thing. So I would say today's lows in both Brent and WTI, since we have outside days, are crucial if they're going to be able to mount anything to the upside. Take those lows out, and I think you got a problem in the market again. In gasoline, no surprise that it finally fell back and challenging the Bollinger Band. Probably find some support there in the near term. The gasoline's already been bought for the holiday season. Remember that, okay? In Florida, I imagine gasoline, they got to watch the pricing of that. This hurricane that's coming in is like nothing they've seen, as it's going to hit the state capital. And then if you look at the panhandle parts that it can hit, there's some real areas here. I don't know if you've ever been in a hurricane. I lived in Miami. I didn't live there. I had my weekend home there, and it obviously was cheap enough to fly and go all the time. Not anymore. And I went through one. I'll never do it again. It's not just you. It's everything around you. You go outside, nothing's functioning. Yeah, they maybe can get your area up. Where are you going? The supermarket may not have electricity. Certainly no restaurants are open for a bit. I mean, depends on the damage, how severe it is. That's the wind. Now, what do you do with the flooding? And that's a whole different world. You can't imagine how fast water rises in parts of Florida. I'll never forget getting there, and I lived in South Beach, and the water was probably up to my thighs in an hour or two. It was insane how fast the water came up. And I mean, forget getting your car going. Now it's in the engine. Thank God I parked up, not down. To make a long story short, in gas, still a problem. The market is waiting on September, I think 1st or so, when we find out what's going to happen in part in Australia. Are the three big refineries going to reach a deal, go on strike? If they go on strike, then the Asian buyers got to turn elsewhere to figure out what they're doing. Same with the Europeans, and it probably gives a bid. We don't have anything going in the market at this point, though. So again, take advantage. If you want my research and or these courses, move your cursor up here. Or go to iraepstein.com under either education or research. You have yourself a great day. I'll see you tomorrow.